Hello, welcome to a demonstration on how to cancel purchase invoice. So with this scenario, purchase invoice has already been paid and refunded by the supplier. It's all because the purchase invoice should have been for a different quantity or for a different amount. So the payment has already been given to the uh, given back. So you just have to cancel the purchase invoice and reissue the purchase invoice, um, or recognize the supplier invoice given by the supplier, but it has an inventory effect as well. So we have to edit the item receipt. So I have here the purchase invoice already been paid. And if you go to cash management register, we have bank here. I have this payment basically for that, and for just to make it simple, we have $10 net price. The price plus 10% GST, so $11 in there. So let's avoid this. Just assuming that this has already been refunded to us, right? Or you might have just avoided it instead. So you will notice in here that there's no way to reverse the purchase invoice, unlike accounts payable. So what will happen here is that, okay, so if you void this, the payment's already been voided, right? And that's um, zero effect in the bank account there. But if we go back to the purchase invoice, if we go to purchasing invoice here, I have this transaction definition. And if you look for that adjustment, right? So typically, you'll just be able to delete it, right? But let's have a look if we'll be allowed to do that. So yes, this is the reason. So transaction I just paid, one has already been paid and cannot be deleted. It's all because even if the payment has already been voided, but the payment is already tagged to this purchase invoice transaction, so we cannot do anything anymore. And more so with that one, we will not be able to update the item receipt prior to that, right? So what you can do though, there will be like multiple steps to do that. So firstly is that we process a purchase debit memo. So what I mean by purchase a debit memo is that you can create the opposite of the purchase invoice. If we go to purchasing in here and you have your return. So I've created this one here. So the whole, this is the opposite. The purchase invoice, the PA here, purchasing transaction, which is like purchase adjustment. The posting is opposite the purchase invoice in there. So what will happen is that this will be applied against that purchase invoice to zero this out, right? So if we create purchase adjustment in here and date it similar to the purchase invoice, and I'll just have this one there and document number. So I'll just copy this one and I'll just append, adjust. Just accept everything in there. So base currency, supplier document number. So I'll just copy this one too for document number and base currency AUD in there. Same item will be used. So which is 1200. Then we have warehouse. I think I've used 601. And for, um, yep, let me just choose first the tax solution in there. So price of $10. So this is the wrong price, right? That we already voided anyways. And let's just select the correct location. Okay, so the purpose of this purchase transaction, which is an adjustment, is to offset it against this purchase invoice because we will be creating a new purchase invoice for the corrected price. All right, so let's cancel this one. So sorry, let's post this instead. So you have it there. So we have your adjust paid, right, for $11. So what we need to do is that we need to apply this original purchase invoice against that purchase adjustment. So in order to apply that together, we have to go to accounts payable and pay a purchase invoice. All right, so you can choose maybe record transfer in there, select that supplier. So the step that we are doing now is primarily to offset against each other, which means the original purchase invoice against the purchase adjustment for the status of them to be paid, right? Because if you go to, let's say, accounts payable in here and purchase invoice, and if I go to this one, you will see that the adjust paid, right? So they're actually just posted. So we want these to be paid because we don't want to be looking at them. We have to apply this transaction against each other. All right. So if we go to this one here and go to that one again, and we know that we have an available credit in here, which is the purchase adjustment. We go to this line, and yep, that has already been applied there. Or you can just click on, apply credit, right? So I have here this the amount, this is the credit applied, and of course we have zero amount to pay, right? So this is just to offset again the original purchase invoice with the purchase adjustment created. All right, because we cannot delete the purchase original purchase order or purchase invoice, so we just have to um, offset that against the purchase adjustment, right? And recreate a new one. Okay, so let's click on Pay Now and save. All right, so it's no longer here. And if we go to our purchase invoices in here, and let's see what will happen to the state of these two transactions. So you will notice that state actually changed between the original purchase invoice and the posting made by the purchase adjustment. So they are paid now. So we can actually process the new purchase invoice. However, in this scenario, remember this purchase invoice is actually created from, if we go to history in here, it's actually created from an item receipt, right? An item receipt which already increased the inventory together with the value. But the value is actually wrong because the value should have been, for example, instead of $10, it should have been $15. All right. So what we need to do is that we need to create an item receipt, like an adjustment item receipt. And if you have multiple steps for item receipt, you can just create another transaction definition, which is like a purchase adjustment. So what I've done here is that if I go to purchasing, right, and if I go to the transaction definitions, I have replicated the posting being done for item receipt to an item receipt adjustment and purchase invoice to a purchase invoice adjustment. So all the postings are the same between these two, right? The only difference is that with the item receipt originally it should come from purchase order, but in my case I'll only be editing anyways the item receipt, right? So I can start from item receipt in here. So I can process this item receipt adjustment just to um uh, oh yeah, before we do that anyway, sorry, before we do that, we have to create an inventory adjustment, right? So yeah, with inventory adjustment, yes, multiple steps. So firstly, right, we were able to create a purchase adjustment and apply it against the original purchase invoice and make the payment to offset each other. So the status changed from posted to paid. And now we have to create an inventory adjustment. So the inventory adjustment will primarily be it's an adjustment that should decrease, right? Let me just have a look if I have any. Yep, this one here. Increase the value. Yeah, we have to decrease the value and quantity, right? Because the assuming that the price is actually wrong. So we have to create here an inventory adjustment. So we can link the transaction. The inventory adjustment will be related to original purchase receipt here, which is this one, right? So 67. So if I go to this one here and look for our 67 here, let me just get this one. Okay, all right. And the date has actually changed based on that one. And we have the reference number. You may fill out the reference number, but we have the link transaction anyways in there, right? Okay, so with this one, we would like to adjust it by one, right? And we have the cost in here by $10 anyways, right? Because that's the posting against the item receipt earlier. So we just would like to decrease the quantity and the value by $10 and click on post. All right. So the whole purpose of that um, inventory adjustment is to remove the quantity. So if we have a look at this item, right, this should remain clear. So let me just refresh this, but we should be able to see that the last cost is 10, but on hand, see this one, on hand has actually changed to zero. But the last cost, because that was the item received previously, that was $10. That was already removed anyways, right? So now we can restart, right? So we processed the purchase adjustment, applied it against the original purchase invoice, and pay them to change the status or the state. And we processed an inventory adjustment just to remove the wrong cost. And of course, entailed with it is the quantity. Now we can process the purchase receipt. So again, the purchase receipt will just be a replica of the purchase receipt that you have. You can convert it as well to another purchase invoice. So looking back again with the setting in here through purchasing, setup, transaction definitions. So replicate item receipt and purchase invoice in here. I renamed them as IR adjustment, PI adjustments. So the reason being is that I can just process an item receipt again, which is duplicating the original purchase receipt and converting it to the purchase adjustment instead of creating a new one, right? So I can create here. If I go to purchasing, and shipping, I have IR adjustment in here. So the IR adjustment, so let's just assume that the adjustment was actually being done again on the 15th anyways of July. And let me just choose supplier. And what else do we have to fill out here? We have the base currency and we have to get the item. The item, then as to the warehouse. And yeah, for this quantity, okay, so let's see. Let's assume that it's already $15, right? Instead of $10, it's actually 15. And let me just change the location to the location tag to the warehouse and click on post. All right, so now this would reinstate. I've defined my IR adjustment similar to the original purchase receipt to post to the inventory account, as well as it also increases the quantity. Right. So if I go back to this item and refresh it, then we should be seeing like uh, uncommitted or on hand of $1, but the last cost is 15, and you will see here, yeah, because I'm using an average cost, so the cost is actually $15, right? Just to make it simple for demonstration purposes, anyways. So we've done that. Since an item receipt, then I can pre-process this um, purchase invoice. So if the supplier has reissued a new purchase invoice for the adjusted account, then I can just process it. Let's say let's today, and just for the sake of a demo, I'll just put um, A in here, just to make it unique for the supplier, and I'll just accept everything in it. But I just have to identify the tax solution. Warehouse in here. We have the price. And let me just check the location. We should be in 601. So I should be okay with that. So I can process, I can post it again. So I can recognize AP and I can just proceed with payment of this one here again, because if the previous one, as what we said, avoided because it was already refunded and that we've already avoided the payment. So now we can process the payment. So if we, I won't be saving it, but I can show you that it should be there. So if we go to pay AP purchase invoice, right? And for pick the one here and look for this, and we should be looking at this one. So that's the one that we just processed. I just appended A in there, right? So that's the one that I just processed, the purchase invoice. But yep, so it's like multiple steps that you need to accomplish. So if the payment has already been made, you cannot delete any purchase invoice. So what you need to do is to create a purchase adjustment that will serve as like a debit memo, and you can apply it against that original purchase invoice. An inventory adjustment to remove the wrong quantity and value. Then a new purchase receipt adjustment transaction that will put back the quantity again and the value, the corrected quantity and value, and convert it into purchase invoice to recognize accounts payable. All right. So, but let's not process the payment in here. But what I'm more concerned is with the reports now. So we have to make sure that we are still correct. All right. So if we go to um, inventory control and go to inventory valuation, and as of today's date, yep, that's okay. We want this item. And what else? Yep, get the warehouse, which I think we used 601, and location is 601 here as well. And I click on view. Yes, you will see in here that the last cost is 15, so the value is 15. So that's what we want, right? So this is in consonance now with the item itself. It says that the average cost, anyways, is $15, right? And that's what's happening or showing in the inventory valuation, which is $15. And let's have a look if we can also see the accounts receivable, right? Not accounts receivable, but general ledger. And if we go to general ledger report, so that's $15 in there, right? And for I'll just show everything in there, but for this period, okay. Let me see if I can filter it out further. Location, we want it to be 601, and the item, we want the item. So let's trim down the results into that particular item in there and click on view. Let's see if this can produce some meaningful information for us. Okay, this is great. All right, so looking at this one here, inventory, we have $15 in there, balance, and that is actually what is showing in here. So $15. So your subsidiary ledger per inventory evaluation earlier is already equivalent to general ledger in here. And more importantly as well, so we haven't processed any payment yet again for the supplier. So it's still coming up with $15 payable in here, which is great because that's what we want anyways to pay later on to the supplier. So, yep, hopefully this quick demonstration helps on how to cancel paid purchase transaction with inventory involved. Thank you.